Hello everyone and welcome to the channel, welcome back to the channel. Anyways, what's up guys and girls? So, if you don't know, it's been a little crazy in the stock market as of late. Last week we had an absolute crazy earnings barrage, and this week is not much different. It's been crazy, okay? So, we've had a boatload of companies report earnings. So I'm not going to break down all of them because that would be extremely long video. So I'm just going to quickly glance over them and I'm going to go over more today's. So today a few companies reported, and that was Disney, EA, Snap. Those are kind of the big ones. Actually Ralph Lauren, Polo released their numbers today. Estee Lauder released their numbers today. Oh my god, Estee Lauder killed it, by the way. So that's kind of the today, and anyways, let's just get into this. So first things first, let's talk the magical kingdom of Disney. So Disney beat on pretty much everything. Okay, let's start running down some of the numbers of Disney here. So Disney was expected to do about $1.55 in earnings per share. They ended up doing $1.84, so pretty big beat there. Revenue was $15.3 billion, topping the $15.14 billion that was forecasted by Wall Street. So Disney obviously had a huge beat there. Not too surprising in my opinion. A little surprising on the EPS number. That was a little high. But, I mean, I think the company's doing well. I'm a shareholder in Disney. I like the company. If I didn't like it, I wouldn't own it, but I mainly like it because I think that they have a brand that will outlast a lot of things. Disney is one of those companies that I think will be around for at least another 100 years, easily. It's one of the few companies I think that will just continue to keep striving and keep building and keep on living, more or less, as Matthew McConaughey would say. The company is just, it's a entertainment juggernaut for the most part. I mean, the businesses they own are absolutely crazy, with LucasArts and more or less Star Wars and the Marvel franchise. Obviously, we know how that's doing now. 20 MCU movies and counting, and they are just raking in the money, more or less. Captain Marvel comes out in March. Avengers Endgame comes out April 26th. Slightly excited. But Spider-Man Far From Home, yes, that's kind of a deal with Sony, but more or less, it's their own movie. And not to mention, they have more coming that they haven't released. They bought Fox, kind of officially. So that brings them X-Men, Avatar, all those franchises back. So that's kind of just like the first layer. Not to mention, they got Pixar. Obviously, Toy Story 4 is coming out this year. Frozen 2 is supposed to release at the back half end of this year. Obviously, Star Wars is coming out at the end of the year, so they have a ton of movies. Not to mention, they got ESPN, which they're starting to get going. They got their streaming service that I think will do really well. I think a lot of people think that they're just going to relate to kids and like the, 15 and under demographic. I think that's highly untrue. I heard a report that there's 35 million households in the United States with children aged 5 to 15. So they're thinking maybe they could get some of that for the Disney streaming revenue. I don't personally believe that. I think Disney is a brand that I know when I was a kid growing up, in the 90s, movies like Lion King and Aladdin and even The Little Mermaid, God, that was a pretty good one. Mulan, all those movies, they just made a ton of hits, right? That related to boys, girls, everyone really. So I think this goes deeper than just 15-year-olds and younger. People in their early 20s, 30s, I think, have a connection with Disney. Not to mention, they have the theme parks, obviously. That's their OG business, more or less. So, yeah, they're doing pretty good. Their stock went up a little bit. It went down after Iger started talking on the conference call. He mentioned a few things. He did say that he thinks that revenue will be going down the next quarter. Their costs are more or less rising quite a bit, especially from the streaming service. In my opinion, it's a necessary evil. You got to spend money to make money, and that's what Disney's doing. More or less, I own the stock, but I sold half of my position when it hit about the 120 mark, I don't remember even when that was, about a year ago, I think, somewhere around there, because the stock is just such a slow mover. This was a stock I wanted to buy. I remember when I first started looking at the stock years ago, the stock was $78. I ended up buying it in the low 90s. And I mean, it's a good company, just the stock doesn't move very much because their value doesn't overall change too much. And they're valued as a very, very slow growth company, and their stock more or less reflects it. So if you want a high growth company, don't invest in Disney, that's for sure. So that's kind of Disney. Next, let's move on to EA Sports. Okay, so EA, if you don't know, is a gaming company. They make like Battlefield 5. They made the Star Wars Battlefront game, which, God, that sucked. And they make other games too, Need for Speed, stuff like that. So they do quite a bit of things. They're not too bad of a company. Anyways, they reported earnings, and oh my God, guys, if you're a shareholder, just a moment of silence for you guys. Honestly, bro, that hurt me. I can only imagine how much that hurt you. The stock is down huge. I'm going to pull it up right now. Let's see. Okay, so the stock ended the day at $92.52. That was up $4.09. Pretty good gain. As of right now that I'm checking, it is down $16.21, or about 17.5%. Holy crap. That's a huge move down. That's absolutely crazy. Okay, so I have a little report here. It says Electronic Arts shares sank more than 11% after the bell Tuesday following a disappointing earnings report. The video game company posted $1.61 billion in revenue, missing analyst estimates of $1.75 billion. That's a pretty big miss. The video game company barely beat on its bottom line, reporting earnings of $1.95 per share versus $1.94 expected by Wall Street, and gave weak fourth quarter net bookings guidance. So the stock is down absolutely huge. It just got crushed. Ouch. This company is interesting, okay? I like EA, and I also have a love-hate relationship with EA. As someone who's played quite a few of their games, I either love them or I hate them. There's kind of no in between. It's not like, say, a Rockstar, aka Take-Two Interactive, where I play one of their games and I absolutely love their games. Grand Theft Auto, Red Dead, to name a few. Or some other companies. I like Square Enix games. There's tons of video game companies out there, but just naming a few. Even Ubisoft. Ubisoft's one I have a love-hate relationship with too. Sometimes I love their games, sometimes I can't stand their games, sometimes I'm amazed at how much detail they put in, and sometimes I'm amazed at how much they copy and paste things just to make their maps so damn big, aka Tom Clancy's Wildlands, or, something like that. That game was just like copy and pasted over like Bolivia or whatever they want to call it, right? So, yeah. So EA's kind of getting in that level, but their games are much worse, in my opinion. And they half-ass a lot of things. Battlefront is a good example. And Battlefield. Man, I feel like Battlefield was starting to maybe be able to edge out Call of Duty, owned by Activision. Not happening. Because Battlefield 5, they missed huge on their numbers for that one. So, and I remember this game. This game came out in October, and by Black Friday, the game was selling for $40. $40 over here in Canada. Brand new games retail for $79.99. Do you know how much Red Dead Redemption went on sale for? $0. It was $79.99 on Black Friday. If you want it, you gotta buy it for that price. I think Spider-Man maybe went on sale $10 cheaper, something like that. The $69.99. No. Battlefield, a few weeks old, straight cut in half to $39.99. And let me tell you, it wasn't even sold out. I went to go look at stores, and this game was one of the only ones not sold out. Not a good sign. That and Fallout got crushed. Anyways, what would I suggest about the stock? I wouldn't hold this stock long term. If I had to give you guys my opinion on the stock, I would think you're not going to get support until about $70. So this stock will probably get crushed a little bit harder on Wednesday, maybe Thursday. Might rally back Friday or next week. I wouldn't touch the stock above 70 right now because it just got crushed and it's got a bad aura around it. So if you want to get it around 70, you probably can't go too wrong there, but don't pick it up under 70 because you might get a little hurt on that one. Other company is Snap. So Snapchat reported earnings. Let me pull up their earnings real quick for you guys too. So Snapchat. So shares of Snap soared as much as 21% Tuesday following their fourth quarter earnings beat. The tech company earned $390 million in revenue, beating the expected $378 million. The company posted a loss per share of 4 cents, smaller than the expected loss of 7 cents. Global daily active users also beat at 186 million compared to the estimate of 184.26 million, according to FactSet. Average revenue per user was $2.09 versus the $2.05 that were expected by analysts. Okay, oh yeah, let's pull up the stock. So the stock is up huge. So the stock was up 12 cents during the day, or about 1.7%. After hours, the stock is up $1.54, or about 21.88%. Obviously a huge move for Snap. Congratulations, Evan Spiegel. You know, that's good for you guys and Snapchat owners. The stock was under $5, I remember, just a couple months ago, really. So this stock has rebounded quite a bit since then. What, about 65%, 70%? That's a huge gain in only a couple of months. If you guys bought it at that level, I'm really happy for you guys. Congratulations. However, I'm not a fan of Snapchat. I don't like Evan Spiegel very much, to be honest with you guys, because when they did that update, people were literally screaming from the mountains, "It sucks." And guess what? They're like, "Nah, you'll get used to it." No, that is not how you run a business. When your audience is telling you it sucks, change it, and your response is, "Nah, get used to it." No. I don't want anything to do with your stupid ass company. Get your goddamn Snap shit out of here. You know, I don't even care. I don't even want to see your goddamn message. I'm not even gonna click on it, let it expire. I don't want to see that garbage. Get it out of here. When you have your customers telling you that, you gotta listen. Did you ever hear the saying, "The customer is always right"? They didn't make that shit up out of thin air. They made it up because what the customer wants, the customer gets, okay? If you start doing shit like that, you lose some of your users, aka Kylie Jenner, for example. This girl left Snapchat more or less, okay? That's not good for your goddamn stock. If you want to keep your people, make them happy. So I don't want nothing to do with this stock. If you guys own this stock, nice. I wouldn't suggest owning it just because of that reason. Not to mention, they're still not even profitable. They're getting to that level apparently, but they're still not there. So I would not suggest buying it just yet. If you really want to buy it, it's not my type of company. If you want, go for it. Best of luck. So that's pretty much the big ones from today. Ralph Lauren reported earnings. Their stock jumped by about 10%. Estee Lauder, huge beat as well. Their stock jumped by about 11%. Not too bad. So last week is the big week. Actually, yesterday was pretty big too because we had Alphabet report, aka Google. Google did pretty well on their earnings, but people weren't too happy on them. I'm not going to even pull up the numbers. I'm just going to talk about this for a second. Google did all right. You know, they're spending about $7 billion in R&D, aka research and development, so good for them. They have about 10 items in the pipeline, I believe, so that's pretty decent. Good luck to them. It's a good company. I would suggest, you know, if you can get in around the $1,100 to $1,200 mark, I don't think you'll go wrong anytime soon. It's a great company. Obviously, they own Google search engine, YouTube. They're doing pretty good. They're a good company. They're here to stay. Like I said, if Google IPO'd tomorrow, the stock would probably be at least a few $100s higher than it currently is. Stock gets pushed around a little bit by the stock market, unfortunately. But take it as a buying opportunity and buy a little bit of Google. Okay, so let's look forward to the week ahead. So Wednesday, we have a few companies reporting earnings. Some are GM and Chipotle. Those are the main ones. Thursday, we have Yum Brands. We have Twitter, Tapestry, Expedia, and on Friday we got Hasbro, Phillips 66, some other companies. Not too many big companies really, but the week that was last week was really the big week. So the main companies that reported last week that were really big were, I'd say, Caterpillar was kind of a big one. You got Apple, you got eBay, you got Facebook, Microsoft, Boeing, Tesla, Amazon, GE, I guess, UPS maybe, McDonald's if you want to throw them in there. There's been quite a few companies that reported, okay? Even 3M, Pfizer, I know a lot of people like to, follow and whatnot. Exxon, Chevron. So there's quite a few companies. I'm not going to go into all of them in depth because obviously that would make this really long. I should have probably kept up with that. My bad. Apple's, after the whole big Tim Cook lowering guidance and saying, it's not going to be so good, and having the whole interview on CNBC, guess what? It's not so bad. It's really not so bad. The stock went to the 140 mark when he said that on, I believe it was January 2nd, I want to say, January 3rd, the first week of January, when he said that. Then the craziest thing happened. Fast forward about a month, the stock's in the 170s. The stock was apparently going to go down to like the 120s, was going to find support, blah, blah, blah. Well, apparently everything's fine and dandy now. If you watched any of my videos, I'm obviously a big supporter of Apple. Their cash hoard is around the $245 billion mark. They can buy a ton of companies if they wanted to. But I guess they're just going to hoard it for now. Maybe do a buyback, dividends. I mean, they are doing buybacks, so maybe they'll up it. Maybe they'll up their dividends. I don't know. I like the company. Obviously, it's not going to grow crazy because at this value, it's valued around the $810, $820 billion mark. And around the 207 mark is when it becomes a $1 trillion company again. So it's not like the stock's going to become 2 trillion, 3 trillion, 4 trillion over the next 2-3 years. It's just not going to happen. It's not going to grow that quickly. So you're not going to get too much growth out of Apple. So the growth in Apple is probably dead. However, as a steady gainer that produces a dividends, it's not bad. It's more of a value pick. It's not a growth pick at this point. And I feel like a lot of people still think it's a growth stock. At this market cap, it's not really a growth stock. Same like Amazon, more or less. Amazon, sure, it always does really well, more or less. They make a ton of money. That's not changing. And yeah, the only issue is they're valued at about the same as Apple, at around the $800 billion mark. They're not going to grow to $1.6 trillion next week. It's just not going to happen. It's going to take time for them to possibly get to that level. They probably will, more or less, but it's not going to happen next week, next month, next year even, really. This could be 3 to 5 years out. So if you want to double your money in possibly 3 to 5 years, then maybe it's a good stock to go with. So another one is Tesla. Tesla's always a big one. A lot of people have their eye on Tesla. I'm still not a huge fan of Tesla. The stock actually dipped a little bit after their earnings. Stock currently is at the $321 mark, so not too bad. Obviously, it's not anywhere near its highs of about the 380 mark, but this is not a really great mark for Tesla because it still has about 1 month to hit the $350 mark-ish, 357, 358, or it can transfer over its shares, so it doesn't have to pay the about $900 billion debt payment, the bond payment that it has. So that one's kind of a big one. They're kind of strapped for cash right now. Elon Musk is sending emails at about 2 in the morning. So a little fishy. I don't know what's happening there. He's saying, times are tough and whatnot. He's basically saying for his employees to work really hard to achieve the goal of electric cars. Guess what, bro? Employees care, I'm sure, about that. But don't overwork them. Don't kill the goddamn people. Come on, they need a life too. You're saying, their work-life balance isn't very good. Other car companies can offer you this and that and this. Yeah, it's great and all that. They're working towards the goal, but they're working towards more or less your goal for the company. So you gotta treat them right. Good employees make good production. You don't want your employees half asleep on the job, and when they're putting together, I don't know, let's say like the axle or something, and then next thing you know, that shit breaks on the highway and you're freaking slamming into a median or something, or they screw up some programming. I don't really know, okay? I don't make cars. But I'm just saying, maybe they screw up something and then it causes an absolute catastrophic accident. You don't want that to happen. So, Elon, be nice to your workers. Give them a break. Let them go home. Don't make them sleep on the factory floor or whatever you do. All right? Anyway, so that's pretty much my take on this earnings. There's a ton of earnings. If you guys want me to review any, and I mean any of them, comment down below and I'll get more in-depth on that. I'll get jiggy with the stock, break it down a little bit for you, tell you what's good, what's not. And yeah, in my next video, I'm gonna be talking to you guys about how with $100, that's it, just $100, I made a 78% profit. 78%. The kicker of that, it was in one day. One day. Not 10 days, not 78% profit on $100 in one day. How did I do that? I did it through the stock market. Weird, right? And the funniest part is, I never even bought a stock. So if you guys want to figure out how I did that, well then subscribe and like the video, and the next video, I'll tell you how. Until next time, guys, see you later and have an absolutely fantastic day.